Hello everyone. In this class, I am going to teach you how to pass the journal entries under sales and sales return. First, we will see the meaning. First one, that is sales. It refers to the transaction where a business sells goods or services to a customer in exchange for money or promise to pay. It is nothing but selling of goods or services to the customer for cash or promise to pay. Promise to pay means what? It means on credit. It means the customer, he buys the goods, but he will not make the payment immediately, but agrees to pay the amount later. This is the meaning of promise to pay or on credit. Now we will see the meaning of sales return. It refers to when a customer returns goods that were previously purchased. Means customer returns the goods that were previously purchased. When sales return happens, see here, this happens if the goods are defective, damaged, or the customer no longer needs them. Then the customer returns the goods. And here, whether this sales return, it is a profit or loss to the business. So sales return here considered as a loss to the business. Why? Because it reduces the revenue generated from sales. It means what? When goods sold are returned, the total sales value decreases. Means this directly impacts the income of the business. So here sales return, it is considered as a loss of the business. Now we will see the journal entries. Journal entries under cash sale means in exchange for money. First one, under cash sale, cash account debtor to sales account. Cash account debtors to sales account. See, here I am following the golden rules of accounting. I have already explained these rules in my previous classes, so please watch that class first, and I will provide the link in the description box. Now, under cash sale, the entry is cash account debtor to sales account. See here, cash account, it falls under real account. And the rule is debit what comes in. When sales happens, cash comes in. What comes in? Cash comes in. See here. So, we need to debit the cash account. And to sales account. To sales account means what? Sales account, it falls under nominal account. So the rule of nominal account is debit all expenses and losses and credit all incomes and gains. Now we need credit rules, that is all incomes and gains. So sales account, here we need to credit the sales account because it is an income. So cash account, it falls under real account, debit what comes in cash account, and to sales account. Sales account, it is credited because it is an income, and the rule of nominal account is credit all incomes and gains. Now we will see the journal entry for sales return. Sales return account debtor to cash account. Sales return account, it falls under nominal account. So here sales return account, it is debited because it reduces the sales income. So the rule for nominal account is debit all expenses and losses. So sales return account, it is considered as a loss to the business. So here sales return account, it is a nominal account. We need to debit the sales return account. When the customer returns the goods, we need to debit the sales return account to cash account. Cash account falls under real account. The rule of real account is credit what goes out. Credit what goes out. Cash goes out. See here. So the cash account, it is credited because cash is going out. Means cash is refunded to the customer. Cash is refunded to the customer. So the journal entry for sales return is sales return account debtor to cash account. Here I will explain through one example. See here. goods worth rupees 10,000 are sold for cash. So the entry is cash account debtor to sales account, that is rupees 10,000. Cash account debtor, cash account, it falls under real account. The rule of real account is debit what comes in. Goods worth rupees 10,000 are sold for cash. So cash comes in. Cash account debtor to sales account. Sales account. Sales represent the income for the business and it falls under nominal account. The rule of nominal account is credit all incomes and gains. Credit all incomes and gains. Next entry. A customer returns goods worth rupees 2,000 sold earlier for cash. See here. Customer returns the goods worth rupees 2,000. Means here we need to debit the sales return account. Because sales return, it falls under nominal account and sales return, it is considered as a loss to the business. So we need to debit the sales return account. The rule is debit all expenses and losses. So sales return account debtor to cash account. It means what? To cash account. Here cash account, it falls under real account and the rule is credit what goes out. Here we need to refund rupees 2,000 to the customer. So real account, it means cash refunded to the customer. So here we need to credit the cash account and the rule of real account is credit what goes out. Credit cash goes out. We need to refund the amount of rupees 2,000 to the customer. So the entry is sales return account debtor to cash account. These are the journal entries passed under when goods are sold for cash. Means in exchange for money. And here are promise to pay. Now what are the entries under promise to pay? Means on credit. See here journal entries under credit sales. See here account receivable account debtor to sales account. Account receivable account debtor to sales account. See here account receivable account, it is classified as a personal account because it represents the amounts owed to the business by its customers, means debtors, and those customers are considered as individuals or entities. So personal account, it deals with individuals, companies or organizations. So here account receivable account or the customer account. Okay, promise to pay means what? It means the customer buys the goods but agrees to pay the amount later. For that entry is account receivable account debtor to sales account. To sales account. And for sales return, the entry is sales return account debtor to account receivable account. Sales return account debtor, it is falls under nominal account, and to account receivable account or customer's account, it falls under personal account. So these are the entries under credit sales. Now we will see the example. First one, goods worth rupees 15,000 are sold on credit to John. See here, on credit means goods are sold on credit, not for cash. Means customer agrees to make the payment later. Sold on credit to John. Here John account means the customer account or account receivable account debtor to sales account. To sales account. John account, it means it is a personal account. So here John account, the rule of personal account is debit the receiver. Who is the receiver here? John. See here, goods worth rupees 15,000 are sold on credit to John. John is the receiver of goods. John account debtor to sales account. Sales account falls under nominal account, and the rule of nominal account is credit all incomes and gains, because sales, it is considered as income of the business. Fine. Now next one, John returns goods worth rupees 3000. Here John returns the goods that were sold to him on credit. Here 15,000 goods are sold on credit to John, and in the second entry John returns the goods worth rupees 3,000 that were sold to him on credit. Here we need to debit the sales return account. Sales return account debtor to John account. Sales return account debtor to John account. Sales return account. Why? Because sales return, it falls under nominal account, and sales return, it is considered as loss to the business. And the rule of nominal account is debit all expenses and losses. So we need to debit the sales return account and to John account or account receivable account. So account receivable or John account, it is a personal account, and the rule of personal account is credit the giver. Who is the giver? Here goods are returned by John. John is the giver. So we need to credit the John account. So the entry for sales return is on credit sales return account debtor to John account or account receivable account. This is about the journal entries under sales and sales return. I hope this concept is clear to you all. If not, please leave a comment. Thank you.